It's kind of sick. Hey, here we go. Well, I really should have been more of a fade in. My goodness. Welcome to Beat the Banks Live, episode 2. It is
What's up, everybody?
Got coaches Chris and Jangle here from yieldfarming.com, the DeFi education brand for Truffle Ventures, the custodians of Beat the Banks, our free community. We welcome all of you here to our weekly show. We had our first episode live here on YouTube last week. Great time. Looking to have even more fun this week. Jangle, how are you feeling today?
I'm good. Rough week in the markets, but that's okay because we're all in it for the tech. And merge is I guess last time we met was still post-merge, so we can stop talking about it now, but everything's still going well with Ethereum mainnet. We can do an update on the inflation and issuance if you'd like. And in the world of DeFi, a few things happening, but nothing catastrophic. Except for the Wintermute hack, but everything is overall pretty good. How about you, Chris?
Yeah, let's. I'm doing great. I'm excited. This is week 1 post merge. Looking at the dashboard for ultrasound.money. If anybody follows ultrasound.money, fantastic website to check on the POS ETH statistics with regards to supply and burn. It's grown quite a bit more than I was expecting. I wasn't expecting more than 5,300 ETH to have been issued already, but do
you want to pull it up?
Yeah, let's pull it up. Let me get that going. Again, it's still super early, and I was like really not realizing it was going to, possibly. I guess we're just more of a wait and see type thing with regards to how the supply is going to go. Let me pick that up. There we go.
Yeah, well, we can forecast it based on our belief on block space demand, right? So Ethereum mainnet has a fixed amount of block space, and every block issues a fixed amount. Well, not exactly, but roughly a fixed amount of ETH. And so, where does the deflation come in? Where does the burn come in? Well, that is on the transaction fees on ETH, right? So if there is a block where gas is above 15 GWE, and you can go check the GWE by going to etherscan.io/gas tracker. That's where I like to check up on it. But if there's any particular block where the gas is above 15 GWE, then that block burns more ETH than it creates, right? And if that block has less than 15 GWE gas fee, well, then that's going to create more than it burns. So we've actually had a much higher percentage of what we call deflationary blocks, but overall there have been more inflationary blocks than deflationary blocks. And why is that? Because the gas prices have been low. Why have they been low? Because people haven't been using DeFi and NFTs and Web3 as much. We are in a bear market after all. So if you look at NFT volumes from the top, they're down like 98%. Obviously, a lot less going on chain than there was, say, 10 months ago. But if you believe that block space demand will go up, which is pretty much equivalent to saying you believe that crypto will succeed in the long term, right? If you believe that block space demand will go up in the long term, well, then you probably also believe that Ethereum is going to average more than 15 GWE per block, which means that you believe that ultimately ETH will be deflationary. Right now, we're at 13 GWE. Last block we just proposed was 14 GWE, I believe. So even in the current state, in the depths of the bear market, we are very, very, very close to net zero inflation. We are at about, if you scroll up a little bit to the supply since merge all the way at the top, and then you click that simulate POW all the way at the top of the page where it says
sweet transition.
simulate POW. If you click that, you can see that we're comparing the ETH issuance under proof of stake, which is the bottom line, at about 0.2% annualized. So if we assume the same gas prices from since the merge until this moment, our annualized inflation of ETH is about 0.2%. Bitcoin right now at about 1.72, and ETH proof of work, if we had the same chain we have now, but under the old consensus mechanism, we would be at about 3.79. So I'm pretty confident that we're going to dip into deflationary territory, come increased demand, increased applications, more risk on appetite from the market, and more, genuine use cases of Web3 technologies emerging. But for now, we are, slightly about 0.2% inflation. Since the merge, our supplies increased by about 5,500 ETH. But if we would be under the proof of work consensus mechanism, which has higher issuance, we'd be at about 105,500. So pretty large difference in issuance this week compared to the previous week under the proof of work regime. And so pretty great result for ETH the asset, and excited to see ETH be close to zero inflation, net zero inflation, then ultimately deflationary, where I believe it'll be on a longer time horizon.
Awesome. I want to take a quick second before we continue. Feel free to join us at our private investment group, which is still Beat the Banks, the PIG, if you want to call it, at beatthebanks.circle.so. Again, this is our free community. We love doing these events for you guys. And if it wasn't for you guys, we wouldn't be doing more of these. So, keep coming, keep watching us, like and subscribe here on the channel. Give us feedback, things that you want to see. We love to action on feedback. And again, thanks to everybody who is here watching, whether you're a new member, a new user, new viewer, members from our existing community, such as yieldfarming.com, Truffle Network, Truffle Ventures. We love having you here. So thanks for joining us today here on the show. With that said, let's go ahead and move on to some news things. That's something we wanted to talk about with some DeFi news, if you want to call it that. Let me get back to our regular view here. And the first thing I want to talk about is something that we talked about on our Wednesday call, which is going to be the Wintermute hack for $160 million. Let me see if I can find a URL for that while you go ahead and talk about this, Jangle, about kind of the widespread of X, because yes, Wintermute, a very long time player in the DeFi space, being hacked for this is a lot of money, but it's more interesting regarding the fundamentals of why and how. And how it can affect you moving forward if you use any of these products that Wintermute or other types of providers provide.
Yeah, I don't think any end users or anybody listening here would be significantly affected by this. I put a link in chat if anybody wants to check out the story from the block where that was published. But yeah, Wintermute, the same market makers that suffered that $20 million mishap with the Optimism token, that previous mishap was due to using an old version of Gnosis Safe, which is a multi-sig wallet solution. So they had created the Gnosis Safe on a previous on another chain, but not on the Optimism chain, and so somebody brute forced the seed phrase for the old address. This seems to be something somewhat similar, cut from the same cloth, an issue by using a vanity address, which was basically a vanity address is an address where you have the public key, the actual address, has certain characters in it, like maybe you want it to start with many zeros out front, which I believe this vault was. It had the prefix 0x, as most wallets do, but then 0000000. So a few zeros in the beginning of the address, which made it easier to brute force, I believe was the method of attack here. Actually, was a brute force attack. And that had $160 million worth of the market making firm's funds in it. So Yeah, quite an unfortunate mishap. Probably not a great idea to have a vanity address with that many zeros out front. I don't know. For anybody listening, I think that the kind of action items to take around this are to make sure that your funds and your hardware wallet are secure by using a hardware wallet first and foremost, generating that seed phrase on the hardware wallet offline, never typing your seed phrase into anything under any circumstances, never taking a picture of that seed phrase. And I would probably stay away from vanity addresses unless you particularly know what you're doing. But it's an unfortunate event for the whole really DeFi ecosystem, the whole industry, because liquidity conditions on chain are, somewhat tight as is, and especially with all of the different alt L1s and layer 2s and different dapps, different stable coins, different L1 assets. Liquidity is kind of fragmented across all these different spaces. So ideally, we live in a world where market makers are not getting hacked for all of their funds, so that we can have a more liquid and more user friendly sort of experience within DeFi. But I don't think this will put them under. According to Wintermute, this is about a third of their holdings, so they are still solvent and won't have to close up shop because of this, I don't believe. But I saw on Twitter that they had offered a 10% bounty to the hacker, so $16 million. So send all the funds except for $16 million to this address, and we can call it a white hat incident. I don't believe the hacker has taken them up on that quite yet.
Right. So again, we were talking about vanity addresses and profanity, which is one that was mentioned in here, and I put the story link in here. Also, recently hacked. Now, vanity addresses are cool, and what I mean by a vanity address is, instead of giving you an address, if you want to send me ETH, for example, instead of sending you a 0x whatever address, I can just give you jangle.eth, for example. That's a vanity address.
That's an ENS name. That's
correct. But I'm just saying, but in its form, it is a vanity address. It's a way to have an address that is not is easy to identify. So ultimately,
but it doesn't. An ENS name doesn't make your address any harder to
correct
or any easier to brute force. Yeah, you can
correct.
have an ENS name registered to a non-vanity address. Yeah.
Great point. So anyway, just be careful out there. I know it's cool to have an address like that sometimes, and in fact, in some cases, you may get extra airdrops if you have, based on the service. It's just not something that I would probably, I don't know, at this time recommend based on these types of issues that are coming up. Not that's not ready for prime time, but minimize the risk. I wouldn't necessarily go with any of these particular products. So we'll go ahead and move on to the next piece of news, which is one that I haven't told you about yet, Jangle. So we'll talk about it now.
All right.
And that is Redacted. The Redacted Cartel. They're going to implement GMX with Pyrex. This is something that we actually talked about last week with regards to Pyrex. Give me 1 second to switch my window so I can get that on the screen. I apologize. I did not have that queued up right away. There it is.
Can you throw a link to that in chat? Because I somewhat follow Redacted. Very interesting project. I do not hold any butterfly tokens personally because of the high inflation rate, but it is on my watch list. I've been waiting for it to continue to get beaten down by this bear market in order to get a better deal on it, and then wait for some of that inflation to kind of run its course before trying to get an allocation. That's been my mindset on that token. But you can't own everything, and I don't like to rush into allocations, but it is a very interesting project. For those who don't know,
go ahead. I was just going to say, I want to qualify this with, this is actually a proposal inside of their DAO to have this happen. So it's not quite in, but the response that I've seen so far across Twitter and whatnot has been positive. Go ahead and continue.
Yeah. So, for those who don't know, I do hold Convex and I do hold GMX. Those are two of kind of my most significant altcoin holdings outside of ETH, if you still consider ETH an altcoin. But yeah, Pyrex is one of the products offered by the Redacted Cartel. So the Redacted Cartel has 3 ways of making money, and that a lot of that money is directed to their token holders, the Butterfly token holders and stakers, RL Butterflies, I believe the stake version of the token. And so the first way that the Redacted Cartel makes money is through owning a treasury. They have a treasury of primarily Convex and Curve, and I believe maybe some Frax, FXS as well. And that generates yield and makes them money. They distribute that money well and good. Second way is Hidden Hand, which is a VE tokenomics enabler, similar to Vodium. If anybody's familiar with Vodium, you can use Vodium to delegate your yield or your voting power for your Convex to Vodium, and it will pay you out, and allocate your bribes essentially. And Hidden Hand is very similar to that, but they work for Aura, Balancer, VE, FXS as well. So they're basically a Vodium type service for many other VE tokens. If this is all gibberish to you, I'm sorry, we'll get past it. This is a little bit deeper in the DeFi rabbit hole. And then the third way, so we got their treasury, we've got Hidden Hand, and the third way that the Redacted Cartel makes money is this more esoteric product called Pyrex, which is a way to essentially get yields on your Convex, your vote locked Convex, and just like you would with regular VL CVX, and have it still liquid and actually be able to borrow against it. So it adds a little bit of a leveraging opportunity and maybe sort of increase real yields with somewhat increased risk on your CVX, and expanding that to the GMX token would be very interesting. I haven't read through this whole proposal, but I think that GMX is a kind of similar sort of narrative type token. We see, this real yield narrative really kicking off. The Redacted Cartel, obviously very DeFi native, very DeFi aware. But if they integrate, I'm reading this proposal, just skimming it now, both GLP and GMX into Pyrex, that could be good for GLP and GMX holders and ESGMX holders, but also if GMX grows and succeeds, it could generate more revenue for Redacted Cartel and Butterfly holders. So kind of interesting to see those Legos, those money Legos being built out. And personally, for me, whenever I'm looking at DeFi protocols that, obviously in these market conditions, if you are considering an altcoin allocation, one of my favorite TA YouTubers, Benjamin Cohen, he would say, first, take a cold shower. This is probably not the market conditions to be haphazardly buying altcoins, and you want to be very cautious about it and very prudent and wait for extreme discounts. That's my thought process, at least. But kind of in this sort of environment, if I am going to even begin to consider allocating to an altcoin, I have a whole bunch of things I look for, and one of those things is a federation of protocols building themselves and positioning themselves around that protocol. That was one of the key indicators when I started getting really interested in the Curve ecosystem is, okay, if all these smart people are going to be building on top of CRV and Curve, why are they doing that? Probably because this is a model that works. This is a platform that's going to continue to gain in use case and adoption. And we've been seeing that on the Arbitrum ecosystem around GMX, which is really good to see. As somebody who's been accumulating, GMX since really February, and paused for the most part in the last few months due to it running up quite a bit. I think this is another kind of positive sign. I go to stats.gmx.io, and there are actually various Dune dashboards, Dune analytics dashboards that I watch as well. to just kind of check in on GMX. If I do that for all my altcoins, it's why I hold very few altcoins, because if I'm going to hold an altcoin, I like to be able to stay on top of it and its analytics and its growth and its adoption, and make sure it's performing as I expect it to from a fundamentals perspective. And I am seeing that with GMX. So I follow GMX in that regard, and seeing the Redacted Cartel kind of integrated or proposed to integrate it within Pyrex, it's a really good sign, in my opinion. So
I'm wondering how if they're gonna provide a bridge for GMX, since Redacted, of course, is on mainnet. This all is on mainnet. Just so you know, the reason why we're talking about this, and of course, if you don't have the money to be on mainnet, obviously that's perfectly fine. Models like these, because of the way that Ethereum is open source, this will be copied. This will be copied and deployed on other cheaper chains moving forward. It's a given. In what form, we're not sure, but seeing the idea that you can have a regular liquidity providing pool and then be incentivized to hold those tokens with convex and yield optimizers, and the ability to then be bribed, much like with what Hidden Hand is going to do here, and just have alternate systems to continue stretching that yield, giving you more ways to take the yield you're already earning and then find other opportunities to gain more yield and more capital, is a really exciting idea. And that's something that we love to talk about. That's something that we think that should be very important for you guys to understand, is that once you provide liquidity into a pool, getting those yields, yeah, that's great, but there's even more stretching you can do with that to create a beautiful flywheel effect through multiple different protocols and opportunities, and in some cases blockchains in this case. So having that wonderful yield waterfall cascading effect is going to be important for you, I think, when you're moving your positions moving forward. And doing so in DeFi makes it a very decentralized, and you could even say democratic way, because you're going to be bribed to vote for certain incentives to help them improve your yield.
I think some people don't like the word bribe. I think what is the other saying people use? Incentivized voting.
Yeah,
I think,
incentivized voting.
Yeah, bribe, I guess, has a negative connotation.
Well, I
I
mean,
suppose.
it has
I
its
don't think it
own
really
term as a
matters.
war. The bribe wars is what exactly is. I mean, there's this model of just protocols coming and literally giving you capital, in some cases in flat USDC, based on the amount of share that you have and your ability to vote for a particular pool. It's interesting. I like it.
To give some context, before, bribes were very popular in DeFi, and I think they were, really popularized by the curve wars, as some people kind of colloquially call it, and the act of bribing VECRV and VLCVX holders to get more liquidity into your curve liquidity pools. Before that was really a thing, we relied on, or projects relied on, inflating their own token in order to incentivize yield farmers, right? So they would say, oh, well, we need liquidity for our protocol assets. We're going to go to a DEX, or maybe we are a DEX, right? But we're going to go to a DEX or be a DEX and have a lot of our token be allocated to that pool. So what does that cause? That causes your token to be farmed, which typically causes your token price to go down, right? So we're going to fund and purchase liquidity by giving away equity in our project. We're going to inflate our token. But then as the price of the token goes down, the yield goes down on those pools. And then eventually the farmers leave, leaving you with a token that is inflated and a price that is bad and no more liquidity. And that was kind of a phenomenon referred to as like mercenary liquidity farming, toxic liquidity farming, toxic capital, mercenary capital kind of issue. And so that we saw kind of the industry try to find a way to fix that. And yeah, if you have kind of better economics where you can get more bang for your buck by bribing people who hold a governance position in certain protocols, that's a good thing. Now, obviously, GMX doesn't hold. I mean, you do get governance and the ability to vote, but it's not like Curve where you are kind of allocating actual like emissions of the CRV token. You're not allocating emissions of the GMX token by being a GMX holder. But this is Pyrex, not Hidden Hand anyway. So it's okay. It's important to note that this is, I mean, by using sort of yield aggregators or any additional smart contracts, you're giving kind of control over your assets, or you're exposing yourself to an additional layer of smart contract risk. So whenever using an auto compounder or something like Pyrex, or really anything where you are adding additional smart contracts into the mix, just be aware that it's not necessarily risk free. You are adding sort of additional counterparty risk. I mean, we've seen tons of exploits, from a Reaper to many auto compounders, and sort of additional layers of the DApp stack get exploited, wrecking people. So be careful with your smart contract risk, as always.
Agreed. Before we continue, just want to take a quick second to shill ourselves on Twitter. If you'd like to follow us on Twitter, we would love for you to follow us. I should add Zach to that list. Let me do that. Let me do that real quick. So feel free to follow us on the Twitters. Why are my cats?
I can hear them in the background.
I know. I was like,
they sound like they're going through an exorcism or something.
The cats want you to subscribe to our Twitter. So these are our Twitter handles. Feel free to check it out. If you watched us last week, you know that we really think that crypto Twitter is a fantastic source for you to get your materials. If you go to Beat the Banks, I put together a list of great Twitter influencers you can follow in a list. I can actually add that here to the chat if you are interested. Feel free to add that. It'll upgrade your Twitter feed immediately. Also wanted to bring about the mothership that is Truffle Ventures. Truffle Ventures is our brand new VC focused deal flow pipeline. So if you want to be part of our syndicate, we are hard capped at 400 seats. If you're an accredited investor, feel free to reach out to us. We're more than happy to get you in touch with the right people. So just get with the next great offer in all of DeFi investing. It's going to be with Truffle Ventures. And we thank them for, they're not sponsoring this, but giving us the platform, I guess, to do all this. So again, thanks for that. Thanks everyone. Of course, I'm looking here in the chat. I'm seeing a whole bunch of familiar faces. Thanks everybody who are part of our DeFi mastermind at Truffle Network for joining us here today. Let's go down to the next piece of news. The cloud-based dapps are going to be coming for us, Jangle. What we're talking about is an article that you just sent me on Coinbase, launching a platform for Web3 developers. This is also important because of another article that I talked about. Get.
Yeah. I think this
there
is
we go.
I think this is a good step forward in making the development environment potentially more developer friendly, and therefore onboarding more devs into Web3. And more devs means better fundamentals, right? That's kind of the most important fundamental that you could follow, is how many devs, how many commits, how much actual developer activity is occurring in Web3 on your favorite blockchain, on your favorite rollup, whatever. And I remember when I was first learning kind of the basics of web development and shipping kind of web applications. I learned using Azure and AWS and cloud plugins and hosting my web applications in cloud environments, and being able to really easily integrate a lot of cloud services into my applications, because this technology was like so built out for Web 2. And so if you're creating a project kind of from scratch, it really helps not only to have a cloud environment to run your project, and so that you can like seamlessly kind of scale as your user demand and engagement grows, but also to have built into that cloud platform tools and functionality that you can like easily just put into your app. And so Coinbase probably in a good position to help build that. If I was Microsoft or Amazon, I would really seek to take advantage of their kind of market edge in the cloud computing space as is, and really focus and double down on Web3 integrations and Web3 functionalities and Web3 tooling. But
And
as
it's
long
free.
as Oh, wow. Yeah, but as long as they're not doing that, then Coinbase has a huge opportunity to move in and become kind of the de facto cloud platform for Web3 developers, like kind of Azure and AWS is right now. While I'm thinking about it, I can see there's 29 people in the stream, 11 likes. I think we can do a little bit better. So
Yes,
go ahead
let's
and
bring up
hit
those
that like. I
likes.
appreciate that. But
Well,
yeah,
well,
big
I,
deal,
w-
big deal.
I want to bring up the other thing we talked about earlier this week, and that is Binance doing the same thing, but with Google. So if you're a Web 2 developer looking to get into Web 3, BNB chain or Binance is actually looking with their Binance Smart Chain or BNB chain to also create a new um, tooling environment for developers looking to come down from Web 2 into Web 3. I don't know if it's particularly free, like Coinbase Cloud, but most things with Google Cloud do have a free tier. So if you're looking to get into, if you're a developer watching the stream and you're looking to get into something like this, definitely something very tantalizing. So if you know a developer, point them to the stream. Here's some resources that if you want to get into, Web3 with some known entities. Obviously, there are some free things out there, like if you want to use something like Heroku or Vercel, things that have been around forever for developers that are free. You can now use established cloud-based infrastructure, such as with Coinbase Cloud. Not sure who their provider is. I'm assuming it's probably Google. Same thing with BNB Chain here, using this partnership with Google. It's going to bring just a ton more people into this space, I think, especially from a building standpoint. This is part of that. I think that tipping point where we're going to start seeing more and more teams coming into the Web3 space. What they're going to build, it remains to be seen, but I'm hoping that's going to spill over into things like commerce, into things like metaverse, into things like GameFi, NFTs, bringing more of that real world business model down into blockchain and solidifying that this is going to be the future of how we do business. We've talked about that before in Beat the Banks trainings and just Beat the Banks AMAs. That's why we're all here. We're early, right? We're the early adopters of what's going to be the most amazing shift in how we do business in human history, in my personal opinion. I don't know if you share that opinion, Jangle, but
I think that yeah, Web3 and crypto as a global settlement layer for value is certainly a big deal. Yeah, it's a 0 to 1 innovation, being able to move cryptographically secured value around on the internet. Yeah, I think that is kind of gonna change a lot of things. A lot of businesses it won't affect too much. And for for several years, I think that there's going to be a lot of building out that needs to occur, like building stuff like this to make the functionality actually more practical. And I don't think everything is necessarily going to happen on chain. I saw that deep sleep and mental de-stress, which I'm sure we all need right now, but deep sleep in the comments asking if it's decentralized. And I think an important thing to point out is that really only the smart contract layer is kind of decentralized. Only the blockchain layer is decentralized. Like, let's say, like Reddit using Arbitrum Nitro to put their karma system on chain. The Reddit is still a very centralized, Web 2 company, right? But they're taking this specific element of all of their systems, right? The karma system, the like functionality, the like and dislike counter, essentially, for every user account and every post, right? They're putting that bit on chain, right? So they're still predominantly a very centralized Web 2 company, but they say, hey, how can we improve our user experience or add functionality or take advantage of this new technology that is, somewhat decentralized or very decentralized or whatever. This blockchain technology, what blockchain integrations could we build in our current sort of tech stack that would add value? And I don't think that's translates necessarily to in 5 or 10 years or even 20 years, every company doing everything totally decentralized, right? I don't think that's the case at all, but I think that there's going to be opportunities kind of like Reddit bringing their karma system to on chain. There's going to be opportunities, and that's going to create opportunities for these cloud platforms to add more tooling for Web3 type projects within their cloud platforms, like what Coinbase is doing here. And so, obviously, you might have a front end website that is run on cloud servers that are fairly centralized, like most projects do. That's fine. You can still have a front end web application that's fairly centralized, and your smart contracts can live on Ethereum and your user funds not be custodied by you at all, right? I think that's kind of the vision, is how do we create this sort of decentralized settlement layer, this decentralized transactional layer that any applications on the internet can plug into, and they can utilize this smart contract technology, this decentralized infrastructure, these decentralized capital rails to enable value settlement, to enable value transfer, and to enable like cryptographically secured ownership of digital items, and take those technology primitives and work them into like their overall product offering and their overall user experience. I think that's kind of what it looks like on a medium to long-term time horizon.
Awesome. So everyone, thanks so much for allowing us to entertain you with some news. Like I said, this is our second episode. We're actually looking to produce some periodic, meaning 2 or 3 times a week, news short form content. Subscribe to the channel. You'll be seeing those in the next couple of weeks. We're going to try and do more of this news, daily news or frequent news you can use moving forward, so you can be up to date with some of the best curated news from DeFi that we think would be, worthy of you trying to keep, ahead of, because it's something that that Jangle just mentioned, staying on top of certain positions, getting the right information out there and knowing what that is going to be important to do so. With that said, we're going to go ahead and move into answering some of your questions today. So if you have a question, put it in the chat and we will try and answer it to the best of our ability. Let me switch my ticker. There we go. Answering your questions live. Let us have it. What's the one thing that you've been waiting to ask Jangle or myself at this time about investing in crypto and DeFi? Let's hear it.
While we're waiting on the questions to come in, we can talk about Arbitrum and OpenSea.
Oh, yes, let's do that. Give me a link. I'll find it.
Yeah, I've got a Twitter thread from OpenSea. There you go. There is the announcement from OpenSea. They're expanding to Arbitrum. I think it's really bullish for Arbitrum. Very good news for Arbitrum. OpenSea is obviously a major player. And the fact that they think that Arbitrum is a place they need to be operating is a really good sign for the Arbitrum ecosystem. My initial reaction is like, ooh, this is probably not going to be good for Magic, right? If anybody's in Treasure DAO, maybe if there's some Treasure DAO bulls, some Magic bulls in chat, like feel free to refute that, because it's not a super well thought out position. But yeah, essentially, like my thought was, okay, Arbitrum NFTs, I instantly think, Treasure DAO and that whole ecosystem. And like, honestly, I've been kind of tentatively checking in on it every now and then for like the last 8 months. And I haven't seen a whole lot of developments there. So the fact that OpenSea is moving over there, the main project that I'm aware of on Arbitrum, like the biggest one that I know of, NFT wise, is like the Blueberry Club, GMX's community NFT project. And so I went and I checked, and the majority of that volume is actually happening on OpenSea now, I believe. So as opposed to like whatever other thing they were trading on before, I even forget what the name of the previous marketplace was. So will OpenSea be RB's NFT marketplace, or will we see an RB NFT marketplace themselves? Yeah, so I would assume that since OpenSea has such great network effects, they're probably going to be the dominant marketplace on Arbitrum now. Like I was saying, like the Treasure DAO is a place where you could like kind of trade NFTs within their ecosystem before, And I think there might have been some other solutions, but yeah, definitely OpenSea probably going to be the primary NFT marketplace on Arbitrum, I would assume. Suzzy Quiver as
I think it's Susie Quiver, sir.
Oh, okay, interesting. Suzy Quiver. I was thinking like SUZ and then Y was like a separate thing, and then okay, Quiver. Anyway, doesn't matter. Suzzy, Susie, thanks for being here. Either way, do we sleep? If so, how much? I sleep no less than 7 hours a night, usually 8. If you can't sleep, then at least for me, I can't think. So, gotta sleep. If I don't get enough sleep, then I'm just thinking about how tired I am, and I can't think about anything else. Chris is fairly immune to the necessities of human existence. But
So unlike Jangle, I have 3 children. 2 of them are fairly young. So the idea of sleep left my life roughly about 15 years ago.
don't sleep on sleep.
Yeah, don't sleep on sleep. I'm also a university professor, as many of you know. So yeah, I sleep. I average, I want to say 5.5 to 6 hours. 6 hours if I'm lucky. On the weekends, I do sleep in a little bit. My wife is very nice about allowing me to sleep about 7. It just depends on if the kids want to. Now that the kids are a little bit older, they don't come in and jump on the bed and try and particularly irritate me that early in the morning, because I'm just not the nicest person in the morning. I'm not a very good morning person. I'm definitely a night owl. I just have this. It's weird. I have this thing where I can sleep 4 or 14. If you give me the time to sleep, I will sleep and just be passed out to the world. But oftentimes, if I do that, I wake up and I'm like, I feel like so much of the day has passed, right? So for me, I used to be one of those people where like I can sleep when I'm dead type of people, like Steve has mentioned there. But at the same time, yeah, I could probably, I know from a mental and productivity standpoint, I could use more sleep consistently. I'm just really trying to find ways to be better at that, and maybe I'll document that journey, because I do live on a little bit of caffeine. Like I'm happy to own that. So if you happen to see me sipping out of a cup, this is not normally water, but it's just one of those things. I should sleep more. I probably will start sleeping more, because I do know that, for a lot of people in terms of improved productivity and mental, faculties, sleep is a key component of that. I fully recognize that. It's just a matter of putting those things into action. I think is probably the hard part for a lot of people. So it's definitely something that's on my wish list for this year. One thing we're thinking about doing is doing that whole digital nomad life, where we just kind of stay and just kind of, hop from area to area, after, every 3 to 6 months or so. So making sure that, we have great sleep and wherever we're at, because we could be adjusting to different time zones, is going to be key while still staying productive. So thanks for that question. Appreciate it. Let's see. What other questions do we have? 4 kids. Yikes. What's the yield on that play? Oh, let me tell you, there's no the ROI on having children. It's a thankless job being a parent, let me tell you. It's a thankless job.
Yeah, that's what I'm saying is in modern times, if you're living in a city, kids are just they're zero yield. They're just only a liability. Back in the day when, if you had land to work, well, then you could get some good returns on that cheap to free labor. So yeah.
Yeah, I do. So I will say that I do. My kids are homeschooled, and I do have time to myself, and I think that's probably the main reason why my wife is happy to wake up early and I'm happy to go to sleep late, because we each have our own little blocks of time that are just us, like individually just us. And so we can do the things that we want to do, whether for me, if that's just, doing research on projects, or, grading papers, doing a little bit of gaming, doing a little bit of digital creation, things like that. It's good to have time to yourself. So I'm going to treasure it while I have it now, because Lord knows I'm going to be much more sad when they turn out like my oldest and then just stay in their room all day and not talk to you. So I'll take what I can get now. I love being a dad and spending time with my kids whenever I can. Great question. Let's see. What's another great question we can get here? Steve McGarrett, what do I teach? I teach IT. I'm a 20-year IT professional outside of working here at Truffle. So I teach software development. I'll give them a shout out. Bellevue University, BELDVUE.edu.
I actually taught software development and web development. Well, the basics of object-oriented programming and web development as a teaching assistant as well for a couple of years. So I wasn't the head honcho professor, but taught a lot of classes. So,
all right, let's take this question from Raquel Kababayan. Why is the Ethereum price going down? Jangly? Ethereum Maxi in the room?
Something to do with basis points. I think there's like a war as well. And I don't know, something about Germany and not having enough nuclear power. All the macro, I guess, is the prevailing thesis, right? Remember, it's kind of all one trade, right? The S&P 500, tech stocks, NASDAQ, Bitcoin, ETH, like they all move together, right? Is Apple the same thing as Bitcoin? No, but if you look at their charts and their performance yesterday or whenever the FOMC was, like they trade very correlated, right? And so like if you have to ask like why is the ETH price down? Well, then you'd probably also ask like, okay, why is the Bitcoin price down? Obviously, they're not one-to-one correlated, but they're very heavily correlated. Then you'd ask, okay, why is Twitter stock down? Why is Tesla stock down? Like it's kind of crazy. They're all not the same asset, but they trade very correlated. So why is that? It's because we're in a very interesting macro environment, and I do think that on a long time horizon, the fundamentals of a particular asset do play out and reflect in its price, right, and its market cap. But on a 1 day time horizon, on a 1 week, on a 1 month time horizon, that's not necessarily the case. You're going to have much more of an impact on the price of an individual asset based on the movement of its sector, right? It's and that's going to have a lot to do, especially these days, with monetary policy, things like the inflation rate, the unemployment rate, the federal funds rate, the Fed's stance on increasing or decreasing the monetary supply. I'm not going to get too into it because I think there's a lot of good content on the internet that can break down the macro situation. And to be quite frank, I don't care for it. I don't care to spend a lot of time thinking about what the Federal Reserve is going to do, because the whole reason why I am here is to help evangelize and educate on a financial system that's kind of decoupled from the nation state. While we're not there yet from a price perspective, obviously our sovereign internet money seems to trade very dependent on the Federal Reserve, right? Isn't that funny? Like, we've created this decentralized internet-based money, and still its price is totally dependent on the macro and the central banks. But that's just where we are now, and I think it's a safe assumption to say that we're going to probably stay there for the somewhat foreseeable future, right? It's going to be at least a few years, more likely a couple decades before what the Federal Reserve, the federal funds rate and the federal monetary policy doesn't have a material impact on the price of cryptocurrencies, right? And digitally native, cryptographically secured value, right? That's very heavily dependent on the macro environment. So,
Jangle, drink water.
Cool.
Drink water, Jangle. Another question from Susie. Do I have to wrap my ETH that has been on a hard wallet prior to the merge? The answer is no.
Well, the merge has already occurred.
Yes.
So just like I kind of wouldn't shut up about, you don't have to do anything. You're probably not even going to notice. And I'm glad that you asked, because like literally there are probably a lot of people who didn't notice that the merge occurred. And I don't exactly know why so many people were fidgety about, oh, I have to do something before the merge, but they weren't feeling that same way about previous hard forks, like, you know, the EIP 1559 hard fork. I didn't see a lot of people asking, well, how do I get myself ready for the EIP 1559 update, or any of the previous hard forks that delayed the difficulty bomb. People weren't kind of agitated about, oh, what do I do to prepare for it? If there's a hard fork of the Ethereum network, an upgrade to the Ethereum network, you don't have to do anything. All the new centralized exchanges are going to point to the correct version of the chain, and you won't have to update your MetaMask. You don't have to do anything. And so I hope that that everybody had a great time doing nothing for the merge. Besides maybe staying up late if you're in North America and celebrating.
Which we did do. We did. Jangle and I did follow along with the party live stream from the Ethereum Foundation, and it was pretty glorious. Even the somewhat you want to call it cringy song of the day for Ethereum. But it was cool to see the moment, at least on the console, when the proof of work node status window was open and it said POS activated with two big panda heads on the sides. That was a really cool moment for me in human history. I am one to cherish things like that, regardless of how good or bad they are. I distinctly remember, you know, this is one of those moments where you're gonna remember where you were at that time. Like, for example, when Barry Bonds hit that home run, I remember very clearly what I was doing when he broke that record, asterisk or not. Same thing with Sammy Sosa, and Mark McGwire did it, you know, just a couple years later. There's a variety of moments that are like that in my life, and I think this definitely qualifies as one of them. Myself being a technologist, Jangle being a technologist, and just seeing where things go from here. It's a new era, I think, in the world of our magic internet money. That hopefully we self custody and can take anywhere with us, and that's the main reason we're here. And to answer your question, you know, Steve, why aren't more people coming into DeFi for greater returns? That's a fantastic question, and I think the answer to that is really just eyeballs on, you know, on programs like ours, eyeballs for you know, just digging through, getting the research. One thing, of course, that we push is that confusion equals money. A lot of people come into DeFi and they think this is way too confusing for me to make. I don't know what that's going to be on my $500. You know, so for some people, it's not worth the legwork. But for those who are willing to come down, do the research, realize that, you know, with inflation, the money that's sitting in their bank account is losing money with these terrible rates that you're getting on your CDs and your Christmas clubs and your savings accounts. The real yields are down here. If you live in a country where your national currency is being devalued due to whatever, you know, economic conditions, the number of people that I've talked to when we had people onboarding into yieldfarming.com that have just come to crypto to escape the economic turmoil in their country and hold assets that hold real value, that won't be devalued by the things happening in their country, it was jaw dropping. And to be a part of that revolution, to bring people into the next stage where you're custodying your money, and it's got real value that you can control, is a huge narrative. And I think the moment that kind of the light bulb comes on, I think we'll see more people coming down here, more normies, or civilians as we call them. There's a great meme that we've seen repeated over and over again, you know, where there's a line of people buying GMX at $45, but they wouldn't buy it at 15. I think there's some sort of network effect that has to happen that will force people to realize, oh no. So you guys being here, being early, understanding, you know, the things that we're talking about. Again, we're not giving financial advice, but we're empowering you to make those decisions for yourself, and that's the key. Let me move on to the next question that I saw here, and thanks for that, Steve. Zoe Frazier, is it a good idea to DCA the GMX issue bought at $20? The answer is yes.
I don't know if
Go
we
ahead.
can say that though. I mean, I don't
Can
think,
you?
I think that to make it clear, I mean, I don't give price predictions really. I don't like
But as
to
a
say
strategy, is DCAing
this is a
good?
good buy. I mean, yeah, if you can buy GMX at $20 and it's trading on the market for 45, that's obviously good, right? The market is pricing it higher currently, but I think it's really impossible to say with any degree of certainty what altcoins are going to do in the short term, right? And I think that it's a pretty dangerous environment in general to be allocating to altcoins. So I think how you protect yourself, or how I protect myself, is, you know, look at where a lot of these altcoins bottomed, and in, you know, a few months ago, and you know, if they've 2x, if they've 3x from the bottom, um you know, don't measure them from their all-time highs. At least in my opinion, I don't like to measure from the all-time high of the bull market, because that's not the environment we're in anymore. How much have they come up off the all-time lows, or the lows of the last, you know, 6 months, 4 or 5 months, and measure from the bottom, and make sure that you're okay with a drawdown to those levels, or maybe even below those levels if times get rough. And so how I protect myself from major drawdowns is by a rational position size, right? If something, you know, it has a ton of upside, you know, but it has, you know, potential 70% or 50% drawdown just to get to its lows of a few months ago, then you know, if it has 10x potential, then a 1% allocation of your portfolio to you know, a 10x turns it into a 10%, and that changes the fundamental structure of your portfolio, you know. And if it's a quality asset, then it has some sort of like yield associated with that, along with the appreciation. So I don't, I can't say that, oh, this price is a good price to DCA, buy this, buy that, you know, this is the price target, because I think that it's not really a long-term sustainable mindset, in my opinion. But like learning how to improve your fundamental analysis, and getting better at actually understanding what's happening on chain, and how like different market forces can interact with each other, and the second, third, fourth order effects of certain, you know, tokenomics or partnerships. I think those are the skills, and the kind of mindset shift that the people who do well are, you know, focus on, right? So not just like, this was this price, it could be this price, like I buy it, it go up, I sell it, I make money. Like refining your due diligence process and being able to come to those decisions on your own, is sort of like what I, you know, I'm passionate about, not as much price targets.
But as an overall strategy, in the event that you have high conviction on a particular asset and you want to not worry too much about the volatility, DCAing, or dollar cost averaging, as we like to call it, is a sound strategy to protect yourself on the upside and downside on the swings on the price. So that's where my mind was at. The Jangle perspective obviously is quite deeper.
If you're gonna talk about DCAing, then
Fair
like
enough.
why ask? You know, like if you're talking, I feel like maybe people are misusing the term DCA, because if you were DCAing, you never stopped, right? You were DCAing
Right.
a month ago, you were DCAing a year ago. Like the DCA doesn't mean like I stop buying when it's low, or I stop buying when it's high, right? DCA means like I buy every Monday at 1:03 p.m., you know, and it executes in the most automated, and I don't think about it at all. Like if you're asking about it, it's like, should I start DCAing now? It's like, should I pause my DCAing? Like I see people say that all the time. It's like, well, then you're not DCAing, like you're timing the market. True. The whole point of DCAing is that you don't think about it, you don't time the market. So make sure that you're not like market timing, but convincing yourself that you're DCAing because, oh, the price has gone down, should I pause my DCAs? No, this is the whole point of DCAing, is you're buying when the price is low. So keep that in mind.
I wanted to ask your opinion, Jangle, what you think on automatic rebuying services like Roundly, or services that, you know, that will take spare change on transactions and automatically buy crypto with it for you.
As far as like cashback and stuff, like I don't spend a lot of brain juice. I know some people like to nerd out about like what credit cards to get and everything like that. I think that I'm going to get the most kind of return off of like trying to either understand technology or create value. So that's what I try to spend most of my brain juice on. But I just have, I just found like the highest flat rate cashback credit card that I could, and I buy stuff on that and pay it off instantly. As far as like stuff like Acorns, I've heard of like rounding up and like buying index funds with it or stocks with it.
I
Like,
do it.
yeah. I mean, I don't think there's anything wrong with it. But yeah, I don't think I have found like a BTC or ETH card or a card that converts your BTC or ETH into, or your cash back into BTC or ETH that was like as good as the one that the couple I have to that I have that I haven't found any that beats those, and then I can just use cash to yield farm or buy crypto. So it's just, I mean, whatever you think works, whatever you can get the best deal on cash back on, I guess. But don't spend, nobody's becoming a multimillionaire because of cash back. Try to focus on starting a business, making money, or learning more about DeFi.
Fair enough. Let me transition to this piece. For those of you, if you haven't joined our free community at Beat the Banks, please do so. You'll find posts like these. For example, the fundamentals of DeFi, a 3-episode series, we'll call it that, videos between myself and Jangle, where we talk about concepts about DeFi investing before you get to yield farming, which is, of course, if you remember from yieldfarming.com, that's really the main focus of a lot of things that we talk about with regards to DeFi investing, which is farming yields, providing liquidity, and receiving an incentivized yield for doing so at various decentralized protocols. Also in here is the recordings, our mega post for free training. So I created this, quite some time ago. We've been doing these since February. February or March, one of the two. Either way, check out these posts, join the community. If you want to learn more about them, I'll put these here in the chat for you. Check them out. We'd greatly appreciate that you do. And also, one thing I definitely want to, as our last, I guess, if you want to say our last ad break, if you if you want to call it that, is our marketing video from Truffle Ventures. Feel free and check it out. Get an idea for what our great new offer is if you're an accredited investor. And we thank you so much for joining us here at Beat the Banks. We know you do have a choice for learning DeFi education while you're out there trying to make these gains, and we are so thankful that you're here with us on this journey. With that said, we're going to go ahead and move into answering. Actually, we're going to do you still want to do the deep dive on certain things? You want to take a couple minutes to talk about it?
We've been running for a little over an hour, so if we have questions, probably get to them. But
I'll just introduce it, and if anybody has a question, we'll talk about it. So one thing that we had a question on our last call was about ROI dapps. And we're not going to do a huge deeper dive because we're running short on time today. But what is the main ROI deep dive app? That's going to be Drip. That's the one that a lot of people know, and that's the one that a lot of people.
Are you going to give me a heart attack?
I know. Well, you were the one who brought up that you wanted to talk about Furio, but if we're going to talk about Furio, we have to talk about Drip, right? Sorry, let me get that up there. Okay. So what is Drip? Drip is a protocol on the Binance Smart Chain, BNB chain, and basically the idea is it's what we call an ROI DApp, meaning you forfeit capital and then you make it back piece by piece. In the case of Drip, you make a deposit. It is what we call a buddy system. I'm not going to use the P word, but
I will. Ponzi.
Okay, fine. buddy Ponzi.
Blatant Ponzi. I mean, blatant Ponzi.
To have
calling it an ROI DApp, in my opinion, gives like this aura of somewhat legitimacy that I don't like.
Fair enough.
It does a disservice to like all the legitimate projects in the space, in my opinion.
Is there a legitimate ROI DApp that you'd like to introduce?
No, I mean, by ROI DApp, you mean, Ponzi, where the whole product and the whole offering is that you make money by doing nothing. Like no market making, no end users paying legitimate fees, no organic revenue, like just 2.5% a day from thin air, whatever it is. Like that's a Ponzi. Like they're paying out. If anybody makes any money, which certainly some people do, it's because other people are losing money, right? It's a zero sum game. They're paying out the early deposits with any new money that's flowing in. It relies on new money flowing in order to not collapse and lose everybody
Exactly.
money.
That is true.
So, but there are, yes, plenty of legitimate projects within the overall broad space of DeFi, and it's the existence of the Ponzi's that sort of muddy the waters for regulators and for like novice and inexperienced users who can't tell the difference between legitimate projects and Ponzi's, and it does a disservice to the whole industry, in my opinion.
Sure. Completely agree. So the way that it works is that you deposit capital. They take 10% off the top, cute little haircut. And that goes to reward pools, back to other drip holders. And then you receive your investment back 1% per day for the next 365 days. Thus the word drip. If you're okay with seeing that as an investment you want in your portfolio, then of course that is your choice. We are not advocates of drip or most ROI dApps of this length. There are some shorter ones that we've had many members be successful with. Again, the whole idea with schemes like this is that you have to be early, whether it be an ROI dApp like this, or yield nodes, or soldier nodes, strong block, anything node wise, anything where you forfeit capital and then receive money off the back end over time. You just have to be early, because the more people there in the network, that's the more money. That's more security for you to receive your original investment back in time. Now, not to say that you can't make money off this. There are many people in our community who have made decent money off this.
There are plenty of people who made decent money off Bernie Madoff's scheme, but they just had to get out before it collapsed. And there are plenty of people who lost a lot, and more people who lost than people who win. Or else these wouldn't keep popping up, because the devs are making money.
That's
and
true.
They don't care how long it lasts, because whenever this one collapses, they'll just move on and create the next one. And so really, I think very few people are coming out on top of these type of things. And so you have to be extremely, extremely careful, and recognize that you're just essentially playing chicken with the other people in the project. And it's important to understand the tokenomics very well, and also remember that if you are really kind of passionate about the longevity of this industry and the actual promise that a decentralized sovereign settlement technology layer has on the long-term productivity and kind of freedom of the world, and access to financial services, that every day you engage in DeFi and provide liquidity for a certain protocol, or invest in a certain DeFi application, you're kind of voting with your dollar what you want to succeed. So if you're if I'm doing like a high level sort of filtering on a project, and I click on the white paper or on their pitch deck, and what I'm looking for is what innovative technology are they building, and what user benefit is generated from this. Like why are people going to want to use this? And then why are people going to be willing to pay fees in order to use this product and be okay with it, right? Is this generating actual value? And so when I click on kind of one of these Ponzi projects, and I see the main thing they're advertising is not kind of their new technology primitive. They're not advertising the benefit their users are going to receive. They're not advertising the organic revenue that's being paid and like the money being generated by the protocol. They are advertising an ROI. They're advertising a yield. Well, where is that yield coming from? And if you can't easily answer that question, then the answer is you, right? If it says a 2.5% yield a day, which is insane, right? That's an absolutely asinine amount of yield. 2.5% a day is
700% APY, APR.
is nuts. That is absolutely nuts. And so immediately that's a humongous red flag, right? And then you look into it further, and there's no organic revenue. Where's the revenue coming from? Like with GMX, I can look and I can see, okay, this is how much traders lost today, right? This is how much traders paid in fees today. Like on average, traders lose actually a lot of money, especially in a choppy bear market in crypto where the average person is skewed long because people are just generally optimistic, but in a bear market being generally optimistic doesn't really play out very well, right? So I can see all the money that GMX is making off of fees and traders losing money. And I can see that these traders are willingly engaging in this, and some of them may be doing it responsibly, some irresponsibly, whatever. But on this, if I go to this application and I think, okay, where's the product? Okay, there is no product, right? And so since there is no product and there's a humongous yield, right, then it doesn't really take much digging. I don't even need to dig further into the tokenomics to realize what type of project this is, right? This is a sort of, call it a Ponzi, call it an ROI DApp, call it Ponzonomics, whatever. But I think that a lot of times people are so kind of focused on like, I want to make money or I want to make a yield. It's important to not throw kind of just your intuition out the window, because when you look at this white paper, like you should see, okay, they're saying anti-dump mechanics, right? Preventing people from selling, right? How do we, if you pull out of the Ponzi, then we're going to punish you, right? Because we're engineering the ultimate Ponzi. That's really what Drip was. I remember diving into the tokenomics and thinking like, man, this is the mother of all Ponzi's, right? They slap you on the wrist for withdrawing early or selling or taking profits, right? It's kind of tokenomics designed to get as many people in and discourage you and disincentivize you from going out to kind of keep the music going for as long as possible. But like, ask yourself, is that the type of thing that you want to be spending your most valuable and precious resource, which is your time and attention? Is that what you want to be spending it on? And is that what you want to vote with your ETH, vote with your USDC for this type of project? Because every time you engage with one of these projects, you're funding the development of the next one, which is going to be a net drag on the whole space. And that's it's this type of stuff that regulators probably should be focused on.
Yeah, because this is all scary. Like, what happens if Furio goes away? Say goodbye to that money because you locked it up in the vault.
Yeah.
You're never seeing it again. It's just going to be sent back out to you. So yeah, I mean, it's a click and pray kind of deal. So thanks, Jangle, for kind of, fudding this to Kingdom Come. Appreciate you. I knew you would.
Yeah, I mean, I maybe we didn't need to call this one out specifically. I know beef with this team or project, I guess, but
yeah.
Remember, I'm sure there's
Jangle has no issues
like
with you as a person.
I don't know. Maybe there's a real product somewhere, but I don't know. Not finding.
No, there isn't. So here's the interesting part. They're audited by Solidity Finance, by the way. Ultimately, a lot of these staker DApp ROI dApps, they really have no holes in them from a smart contract perspective because the scheme is literally that simple. So essentially, they're rug possibilities, probably not, unless there's something really malicious in there, like if they can cut and run with all the funds easily, which most of them won't, because most of these are clones of the exact same project. Once this closes up, I'm sure there will be another one that looks just like it. I think the one thing we're missing is that the FUR token doesn't rebase. That seems to be the one thing we're missing here. If it would have done that, that would have been like the trifecta of things to completely, wash your hands of. But yeah, so again, ROI dApps, supremely high risk. Obviously not financial advice. You do you. Boo boo.
Yeah, I mean, and as long as people keep giving these devs money, they'll keep building these types of projects. But these aren't the types of projects that are going to bring in, the real innovation. Like if you think about it, most people didn't have personal computers for in the 80s and maybe in the early 90s, and the computer manufacturers needed they needed real applications, right? They needed actual value to come from these machines in order to drive the adoption and the growth of the industry, right? And so, maybe that was keeping track of all of your recipes or something, but maybe, once Excel came out, right, that changed the game. Right now, everybody needs a computer because it adds so much value and so much productivity to the average knowledge worker that not having one is just such a blunder. Right. And that's kind of what we need to happen within the Web3 and the crypto space in order to propel the industry forward and make all of this actually make sense. Like, we're laying kind of the groundwork and the technology primitives, and we're starting to see, DeFi solutions pop up that make sense. But, even then it's DEXs and it's money markets, and then it's like decentralized, trustless, non-KYC perp trading platforms and futures trading platforms. But that's not going to bring in 1 billion users. NFTs are a good technology primitive, but our profile picture NFTs are really going to bring in 1 billion users, or are we going to need to kind of expand the use cases and the actual benefit that the end user is getting? We need those killer apps. We need the Excel of DeFi. We need the Excel of Web3 to bring in 1 billion users. And that's, in my opinion, what I enjoy spending my brain juice thinking about, what that could be and what that would look like. And, why waste time allocating to a Ponzi scheme and voting with your dollar or with your GUI to fund just scams, when you could be focusing on, like, okay, what is the real innovation going to be, and how can I get a piece of that value, and how can I encourage that sort of innovation to occur?
So you're saying it's not Furio?
Maybe not. I don't know.
Yeah, we will talk about this next week, I think, because there's a lot to talk about with regards to this particular topic.
How to find new projects. I think DeFi Llama is a great resource on finding new projects. Looking at just going to DeFi Llama and looking at your favorite blockchain. These days I'm operating primarily on Ethereum mainnet, Arbitrum, and Polygon. And so going there to each one of those chains and looking over the past 7 days, what has had the highest TVL growth. So you can sort by TVL, and you can sort by TVL growth over different time frames. So you can use that if you want to be early in on a project. But I would encourage, before you do that, to study the existing blue chips. Like, do you know the difference between Uniswap V2 and Uniswap V3 and Curve? And the difference between Aave and Radiant, which is something that we talk about a lot here, Radiant. Kind of understanding what exists in the industry currently, and then familiarizing yourself with that technology. And then when you're looking at the lower market cap things, you'll be able to, one, more easily identify scam from not scam, right? Or, I'm familiar. Like, sometimes I'll be reading through the tokenomics of something, and I'll think, this is kind of like that mixed with that. This is a VE token, or then it's going to have sort of like these characteristics, and you just get used to recognizing patterns. And then when something iterates on an existing kind of technology or an existing model or existing way of doing things, you can more easily recognize the innovation. And that comes through, like, literally just reps of reading different docs or white papers for protocols, and paying attention to the space. Like, even in the bear market, you can get valuable experience in this project launches. Like, how is Velindrome on Optimism going to do? They have incentives, they have OP incentives, versus something like a GMX on Arbitrum. How is it going to do? And is Curve expanding to Optimism going to shake up Velindrome? And Solidly rather, aren't they moving to Optimism as well? Isn't that a plan for them to move to, just like
no, they're moving to ETH.
ETH or ETH mainnet. So like following kind of different tokenomics models and what the market decides is best and how the different tokens perform, I think is valuable. Getting a grasp on all that will really help your ability to quickly and efficiently filter smaller projects and newer projects and more easily recognize innovation, I think.
Yeah, one thing that we teach in our cohorts, in the yieldfarming.com mastermind is that we have levels, and the first level is just getting set up, getting ready for that first farm. Level 2 is starting to cultivate that, building that all-weather portfolio. We do it on one blockchain to start, and that's Avalanche. And then we teach you how to build a winning yield farming routine as well as the all-weather portfolio, and just setting up more positions. Getting that right for one blockchain is the key to getting it right for other blockchains, because you can take that same routine, that same research style, the do your own research, the Dior that you do. You can start to take that and take your routine, evolve it, and move it to other blockchains. And that's pretty much the narrative that we continue to push. Moving forward is that routines and research are going to be the two keys for your success in this space. And of course, using a hardware wallet and not over investing and over allocating yourself, because it's really easy to do. Really easy to do. Okay, with that said, we are quite a bit over time. So I will take a second to ask Jangle for, one piece of alpha that you may have. Any protocol that or new protocol or project that excites you. Go ahead.
Manifold Finance is interesting to me.
Goodness.
This is not an endorsement or telling you to buy anything. I don't hold any fold. It's run up quite a lot, and so I'm not interested in allocations at these valuations at all. But I gave a long talk on MEV in a proof of stake Ethereum environment, MEV boost and what Flashbots is doing. I've been in the Flashbots community for over a year now. Very interested in the things that they're building to democratize MEV. MEV standing for maximal extractable value, no longer miner extractable value, because we no longer have miners now. But if you don't know what MEV is, there's a wonderful bankless MEV episode. I'll link it in chat here.
It's a must watch, in my opinion.
It is a must watch to understand MEV in the proof of stake Ethereum world versus the proof of work Ethereum world. So understanding MEV, what it is, what a sandwich attack is, how the mempool works, what an RPC is. I think that's a really, really, really useful thing to understand, even if you're not a shadowy supercoder or a dev. So that's what I'm going to leave everybody with. MEV is probably the most important topic in crypto that most people just have no idea what it is or how it works. So if you can get yourself educated on that, it's going to make you a much more well-rounded yield farmer. And I linked that in chat, MEV.
So what is that? What does that have to do with Manifold?
Manifold is essentially created a private mempool and their own RPC that routes to a private mempool. And so that way your transactions that route through this mempool, they won't get sandwich attacked. It's only a certain amount of or a certain whitelist of searchers, MEV searchers, who are allowed to access this mempool. The searchers, they build bundles to pass on to block builders. There's this thing called proposer builder separation. So then the builders propose different blocks to validators, and validators who are running software like MEV Boost can choose the blocks with the highest MEV. And so by routing your transaction through a private mempool, you are greatly reducing or eliminating the possibility of you being sandwich attacked or being being the victim of some sort of malicious MEV. And then also it kind of traps that MEV in a private mempool. So searchers that can extract that MEV they have a leg up on people only operating in the public mempool, and they also can give kickbacks for having access to that private mempool. And so Fold is actually doing a lot of business development partnerships with different dapps, because dapps, wallets, and users are the actual originators of MEV. And so Fold is giving 50% of the MEV that they extract back to the dapps that they partner with in exchange for getting their order flow. And they are giving 50% to Fold stakers. So right now the revenues are low. They're partnered with Sushi, and they are looking to partner with Layer 0 as well, and Balancer.
Might have to buy now.
I think it is. I think it is overpriced at the current.
It's way overpriced. But everything
based
I've
on
heard
its
about
current
Fold,
cash flows, based on its current cash flows with just the Sushi yields, I think it is at a high PE ratio. But obviously the market is pricing in a lot of growth. So however you want to take that, I don't know if you should buy now. I don't know if you should buy later. I'm not going to give any price predictions. I'm not buying at these levels, but certainly the market is pricing in a lot of growth. So
I have heard Fold to be a $300 token being traded at $55. Actually, this is way down on the Bart Simpson than it has been. It was up as high as $100 last week. So, all right. I might be I've been watching Fold for a quick minute. That might be something that I'll have to look into for a little swingy action.
Yeah, Fold was put on my radar around the time we last did this live stream about last Friday, and it was in the mid 70s with a market cap. Currently, it's in the mid 50s. Its market cap's about 80 million, fully diluted value of 112, which is not too expensive, but I think that there is going to be a winner, or maybe a handful of winners. I'm not sure. I haven't spent too much time thinking about whether it's like a winner take all type of environment, but I don't think it will be, is my first kind of guess. So I don't feel an urge to like really jump on this one, but rather to stay informed and follow Fold's performance and follow their business development, how many dapps they integrate with. And maybe, if they do a Uniswap partnership, okay, I'm in, or something like that, or an Aave partnership, maybe not Aave, but Uniswap partnership. Okay, maybe I'm in. But maybe there's also a lot to be gained just from following this token's performance. Maybe buy some of it so you have some skin in the game and more incentive to follow it, but then using that as a springboard to learn more about MEV, so you might have a better opportunity of more easily and early identifying the major players within the private mempool and MEV space. See what Fold does right, what they do wrong. Maybe at some point you get a bargain on it and they do a lot of good BD. Maybe you don't, but you learn a lot. And so that's kind of the perspective I'm taking. I'm taking on it.
Concise.
Not that concise that time.
No, I know.
But how do you expect me to be concise when it's like, all right, explain MEV from scratch? I think
no, you're not. Did I ask for that? No. But it's good for our clips channel, which I guess is the next evolution of what we're doing here. Jangle explains MEV for 7.5 minutes. That's fine.
That's really concise.
That's really concise. No, I'll give it to you. That's really concise. I'll give that to you. My alpha pick, which I, for some reason, I just can't stop. I'm not gonna say I can't stop thinking about. I'm super bullish on. And this is with respect to Cosmos First, which is happening next Monday and Tuesday in Medellin, as you like to call it, Jangle, in Colombia.
Bogota. It's in Bogota.
Are those in Medellin? Oh, okay.
Wait, you said DevCon? Is that what you said?
No. Cosmos First.
Cosmos versus in Medellin. That's dope.
Yeah.
Okay, I didn't know that.
Yeah, that's why I was asking if you were going to be staying there. little bit longer. You could have gone.
Could you imagine me showing up to the Cosmos verse and just EVM maxing all over the place?
Yeah, I should have sent you this. You could send you this little hoodie. You know, there's a Ethereum hoodie for you to wear walking around the floor. That would have been amazing. You're like, hey, yeah,
Wow.
funny.
Wow.
So, you know, exactly. Kujira, Cosmos, Layer 1, app chain. They're really going to start. The Cosmos first is going to bring new tokenomics for Atom, which should push up the entire ecosystem overall. No inflation right now on Kujira. Real yield protocol. Everything that happens with the proposed, well, I guess the four different services on Kuji. I'll go to Kuji Stakers. I got in quite early because I knew the potential. Kujira, in terms of Orca, is a liquidations house. Right now, Atom is the only particular asset they're providing liquidations on. So basically, as people start trading with leverage, because they're coming out with their margin trading leverage service soon on their order book, DEX, which is called Fin, we're going to get a lot more people who are going to be lining up to trade assets with leverage and get liquidated. So the ability to get your favorite Cosmos ecosystem tokens at a discount, to me, is very nice. This is something that I liked when Kujira used to be on Terra as the Orca dApp. This is now them on their entire protocol. They are bringing up the leverage training very soon. They have a stablecoin called USK, which is, you know, it's over collateralized via Atom. They're coming out with a P2P platform called Local Money. They have an ARB vault for USK called Black Whale, DCA strategy called Calc Finance. They have a lot of stuff that's coming, even a launchpad called Atlo. So there's a lot of things that I like about Kuji. In the next 6 months, I think it's going to send it straight up. And I hope that you all enjoy the journey there with real yield as everything comes back to Kuji Stakers. So that's my call for today, for this week, for this month, and the last quarter. Let's just hope that we do well. That's it. Okay, guys, thank you guys so much for joining us. Hopefully you enjoyed this episode. We're still trying to figure out the identity of the show, but we're going to keep doing it. We're going to have a lot of fun. And we thank you so much. It's coming soon to Beat the Banks Live. We're going to be having interviews, not only with successful farmers in our mastermind, but also successful project teams. I'm looking to get project teams here to talk to you guys, talk about great projects you should be coming into. If there's any projects that you specifically want people to come and talk from, let us know. We'll reach out. We want to build a great audience here and just a great experience overall. Again, we thank you so much for joining us. We know you have a place there's multiple places to go to if you're learning about yield farming and other DeFi investing here in the space. We're so happy that you're doing it here with us. Keep beating those banks. You all have a great weekend. Anything from you, Jangle?
Yeah. At me on Twitter for any bags you want me to FUD. So tag at DeFi Jangle on Twitter.
DeFi_Jangle. Get it right.
DeFi_Jangle with hashtag Jangle FUD my bags. Hashtag
Yes.
Jangle FUD my bags. And I will FUD your bags for being the garbage Ponzi's that they are. I'm just joking.
The worst part is you're not. You would totally con emoji half the things in this space.
Tag me Twitter in there at DeFi_Jangle, hashtag Jangle FUD my bags. All right. Thanks,
Nice.
everybody.
Thanks, everybody. Have a great
appreciate
weekend.
you all. Take care.
See ya.